Is British American tobacco stock a smart buy right now? That's the big question we're tackling today. Welcome to Global Value, and in this video, we're going to dive deep into a thorough analysis of British American Tobacco, BTI stock, emulating none other than Warren Buffett, one of the greatest investors of all time. We'll look at the key numbers that Buffett values most, and then we'll calculate 3 different fair values for British American Tobacco to really understand what it's worth in today's market. Make sure you stay with me till the end because our combined fair value and rating might just take you by surprise. And there's more. I'll also reveal a crucial bonus metric that could be the deciding factor when adding BTI stock to your portfolio. So, is British American Tobacco a smoking hot opportunity waiting to be seized? Let's find out together. Right now, BTI stock trades for $32.33 per share. They're also listed as the ticker BAT on the London Stock Exchange. 2023 has been rough on the business. Their stock price is down 20%, while the S&P 500 is up 19%. BTI underperforms the market, but there's more for shareholders. Right now, British American Tobacco pays a huge market-beating 8.48% dividend yield. That's way above the yield from the S&P 500. This is added to any returns in their stock. In the last 5 years, BTI stock is around flat. They're down just 5%. With dividends reinvested, they'd be up, but they'd still underperform the market. In the last decade, their stock price is down 40% overall. When we go back before the global financial crisis, however, they're compounding at 2.5% annually. They're up 61% overall. They beat the market for much of this time up to 2017. Since then, their stock price has been on a skid. With their average dividend yield reinvested, they'd be pretty close to the market. But the burning question is, why should we be paying close attention to BTI stock? Right now, they trade just $3 above their 52-week close. This comes as they trade $10 below their 52-week high. How big is British American Tobacco? They're huge. They have a $72 billion market cap. The name gives it away, but what does the company actually do? Following the acquisition of Reynolds America, British American Tobacco is neck and neck with Philip Morris to be the largest listed global tobacco company. Slightly larger than PM on net revenue, but slightly smaller on total tobacco volume. British American's global drive brands are Dunhill, Kent, Pall Mall, Lucky Strike, and Rothmans. It also owns Newport and Camel in the United States. The firm sells vapor e-cigarettes, primarily its Vuse brand, heated tobacco with Glow, as well as Velo modern oral nicotine products. The company holds 29% of ITC Limited, the leading Indian cigarette maker. BTI was founded in 1902 and it's headquartered in London, the United Kingdom. Now with that understanding, let's dive deep into their numbers like Warren Buffett using the Select 6 analysis. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. A normal business earns 7% returns on capital. When we look for a benchmark that's double this, we can build in margin of safety based on the quality of the business. BTI has earned stable returns on capital in the high single digits. These come in around 8 or 9% in most of these years. When they're averaged out, they earn 8.4% returns on capital in a given year over this time. That's just slightly above average, but down from our benchmark. Part of these lower returns come from the large amount of capital that was needed in the business to acquire the rest of Reynolds America. This happened in a $49.4 billion deal that was completed in July of 2017. The company added a lot of debt to fuel that acquisition, which is why there's so much capital in the business. We can somewhat see that in their numbers as they have a higher return on equity that's been slightly improving throughout this time. Still though, we're focused on the total capital in the business, which means this is an X on metric number 1. Metric number 2, we want growth in their sales, earnings, and free cash flows. All 3 of these need to be up. In this time, BTI has grown their sales by 15%, their earnings have grown by 45%, and their free cash flows have grown by 4% when we include today's numbers. From 2018 to 2022, these were slightly down, but when we include today's numbers, they're up 4%. This is what we want to see. It's small but stable growth across the board for BTI. It's our first check of the day on metric number 2. Metric number 3, we want to look at BTI from the view of an individual shareholder. We want to see earnings per share growth. In this time, we learned their earnings have grown by 45%. British American Tobacco has also bought back a small 2% of their shares outstanding. This increases the ownership for existing shareholders in the business. It means their earnings per share are up as they have more earnings and fewer shares outstanding. It's another check on metric number 3. BTI has a strong performance so far. What will the rest of their numbers look like? In metric number 4, we want to see free cash flow per share growth. This is pretty similar to the last metric. Their free cash flows per share are flat from 2018 until 2022. When we include today's numbers, however, their free cash flows have grown and they bought back some shares. BTI actually brought in $5.62 of free cash flow in their last 12 months. This is up from where they were at in any period over this time. It's a check on metric number 4. So far, we have 3 checks and 1 X for BTI. Before we look at the company's debt and figure out how much they're worth, why don't we check in on our bonus? Right now, BTI pays a huge market-beating 8.48% dividend yield, but is this safe and can this grow in the future? That's what we want to figure out through our bonus. We want their dividends to be covered by their free cash flows. This has been the case in all 5 of these years. The company has grown their dividends over this time, though they did cut their dividends from 2021 into 2022. This came as their free cash flows declined in that year. Still, both their cash flows and dividends are up from where they were at in 2018. They've been covered and supported in all 5 of these years and today as well. This is a check on our bonus. It looks like BTI, if they're able to maintain their free cash flow levels, is able to cover their dividends pretty comfortably. In recessions, it's businesses with too much debt that can have the biggest losses and even fail. In metric number 5, we want their net debt to be below the sum of their free cash flows in their last 5 years. In this time, BTI has been hard at work steadily paying down their net debt position. They reduced this from $57 billion in 2018 following their Reynolds America acquisition down to $47 billion in 2022. This has upticked slightly to $48 billion today. Still, when we add up their free cash flows over this time, BTI has brought in $60 billion worth. That's more than enough to cover their net debt at any point over this time. They cover this if they can keep these free cash flows up into the future. This is a check on metric number 5. BTI looks like it uses a reasonable amount of debt in their business. Now, how much is the company potentially worth? The big metric of them all, metric number 6, we want their average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. This is the first of 3 different valuation methods. If it's the case, it gives a slight risk premium to the yield of the 10-year treasury. Right now, BTI has a $120 billion enterprise value. This looks at BTI like it's a private company by adding their net debt and their market cap together. In the last 5 years, we learned they brought in $60 billion of free cash flow. This means they bring in $12 billion in an average year over this time. When we divide that average by their enterprise value, it's pretty simple. They have a 10% average free cash flow yield. Currently, they brought in $12.7 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, we get a 10.7% current free cash flow yield. These both come in more than double the risk premium we were looking for. They're more than double the 10-year treasury as well. This means it's a huge check on metric number 6 for BTI. Don't just run out and go buy the business. Watch to see what our other 2 estimates are before you stay till the end for our final market value and BTI's rating, which just may take you by surprise. Everything we've covered so far is important, but there's something missing. This, in my opinion, is the main reason to analyze BTI. It brings us to use a discounted cash flow valuation to estimate their fair value per share. This is based on their business predictability. Like any other model, its outputs are sensitive to its inputs. We're going to start with their free cash flows and use historical assumptions for how these have grown to project them into the future. BTI has not been that predictable in their past due to their big Reynolds America transformative acquisition. This means it's a rougher estimate than most businesses. Still, if we assume they grow their free cash flows at 6% in each of the next 10 years, then in the following decade, we'll assume these grow at 3% annually. We're going to add in their tangible book value to give an estimate of their net worth. This accounts for all the debt the company has, but it may be skewed based on how the accounting is done for their acquisition. You'd want to dig in and do more work on that. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, from today's valuation multiples, an estimate of BTI's fair value per share is around $21.50. Keep some key points in mind. This rate of return already includes their huge market-beating dividend yield, so we would not be doubly counting that. Their stock price wouldn't go up by 15% each year. Right now, pretty much across the board, the company's trading toward the low end of its valuation multiples. They trade for less than 10 times EV to free cash flow, and they trade at a price to owner earnings of just 6 times when their median in the last decade has been around 9 times. That could benefit shareholders going forward if their valuation multiples expand, which would increase the price of their stock. We're also going to take a guru-focused value for British American Tobacco. This uses projected growth assumptions, analyst estimates, and where they've traded compared to their historical values to give another estimate of their fair value. Right now, this comes in at $38.50 per share. Keep in mind, because of their lack of predictability, this is also a rough estimate for the company. It's not financial advice, and you need to do what's right for you personally. Now let's put everything together as we estimate a fair value for BTI and give our rating. This far in our stock analysis of British American Tobacco, stock ticker BTI, we learned they go 5 for 6 on our Select 6 analysis. The company looks great on a lot of their numbers and their valuation multiples. Plus, they have a high dividend yield. The only knock to the business is that they earn just about average returns on capital, but these have been slightly improving in the last decade following their Reynolds America acquisition. When we put our 3 fair value estimates together, we get a total market fair value of around $35 per share for BTI. This comes in $3 above today's stock price. It's around $7 below their street target price of $42.50. Based on this, British American Tobacco is modestly undervalued. If you enjoyed today's BTI stock analysis, subscribe to the channel for more and watch this next video.